Hello, everyone. This is Dan Gramza, and welcome to dangramza.com Market Studies for Monday, December 22nd. Interesting way to finish the week out in the stock market. And as we talked about in the advanced video, we had some fundamental support behind that move. But what do we look for on Monday? A dramatic move? No, I don't. Follow through? Yes. Now, if you haven't seen these videos before, this is a daily video. It's a swing trade concept. The green line means buy, the red line means sell. Dash lines mean it's something that happened before during this week. And what's going to happen for this coming Monday, the dash lines are eliminated and we start all over again. And you can look back at dangramza.com over 10 years of data, and you could see how these lines moved and the risk that was required for some of those moves. Now, it's always important, as we both know, any position you ever take, you manage risk. That's the idea. Where, if it fails, where do you get out? And what we're seeing here in the S&P is that positive close. Follow through, yes, but a big move, no. And if we look at the dollar difference here between those dash lines, that was $550 a contract. Again, just to give you a feel for that. When you look at the NASDAQ market, let's break that down a bit. A dollar difference sell to that buy level was $2,800 a contract. $1,180 was the dollar difference between these two lines, and that all happened on Friday. So what do we look for in the Dow? Not the same kind of action, and it's because of how these indices are composed. You don't see the heavy weighting in tech stocks in the Dow like you do in the NASDAQ market, which 48% of that are tech stocks. But let's talk about what's happening here. Buyers are here. It wants to go higher, but so far we really haven't seen the follow through in that market. And over in our friend here, the Russell, the small to mid cap stocks, it's the same deal. The sell level to the buy level there, by the way, is $1,500 a contract. The euro, look for a sideways to only slightly lower movement. The Swissy, the same boat. It's what I call a neutral zone trade. Let's check out Mr. Yen, and it fell out a bit. Do we look for the same kind of movement on Monday? No, we do not. But do we look for follow through? Yes. It's approaching levels that we found buyers before. Dollar difference, Aussie dollar. Buy to sell level there is $220 a contract. Now, I want to point out to you, if you were a buyer here, it closed under that level. So that position would be underwater. When we look at what's happening in the British pound there, you see sellers coming in and buyers. It's balanced. Look for a sideways move in that market. Dollar difference buy to sell level, $250 a contract. In the Canadian dollar, it's also neutral zone trade. Look for a sideways move in that market. Bitcoin traded above its buy level. The difference between the sell and buy level in that market is $14,975 a contract. And this also, if we're a buyer here, it's closing below that. So it's closing underwater or a loss in that market. Now, let's talk about notes. It traded below 10-year notes, traded below its sell level. Dollar difference there is $125 a contract. Look for a sideways move here too. These markets need to reassess what's going on. The 30-year bonds is in a very interesting rhythm in terms of how it's moving, not unusual, but look for a sideways move here. Dollar difference sell to buy level in that market is $375 a contract. But what about gold? We're climbing up here. The bias is for a move higher, but paper just isn't here. The buyers aren't here in that market. If you're a seller here, that closed underwater as well. The dollar difference buy to sell level in that market is $5,500 a contract. Well, what about silver? Silver's a bit stronger. As we've talked about before, silver can lead the way. Keep your eye on this market. Dollar difference here between that buy and sell level there is $5,000 a contract. But what about copper? Copper rallies to the upside, but finds sellers where it found them before. Look for an inside day in that market. Dollar difference here is $500 a contract. This market's struggling. I don't see a strong fundamental. They say demand's picking up, but you don't see evidence of that. Well, what about crude? Dollar difference sell to buy level in that market is $2,310 a contract. Sideways move to higher is what we're looking for here. I'm not so sure we have the demand with all the supply we have, and that's the same boat of nat gas. Sideways move is what I'm looking for in this market. We have a lot of nat gas out there. And in Mr. Bean, dollar difference sell to buy level is $2,050 a contract. This also wants to go higher. We just don't have fundamental support of that market. Corn, we're seeing it move higher because of demand for ethanol and that production, which is about a third of our crop for corn, is moving it up a bit. $150 is dollar difference sell to buy level in that market. Sideways move is what we're looking for. And on wheat, this traded 1/4 of a cent higher, so you can barely see it, but it did trade higher. Now, the dollar difference sell to buy level in that market is $1,100 a contract. And if you were a buyer here, this is trading below that, so it's underwater going into the weekend. Well, those are my thoughts for today. Thank you for sharing your day with me. Look forward to being with you again. And as always, take care.